Hello and welcome everyone to Gold Asset of the Day for the 1st of September 2020, presented by myself, Phil Carr, at the Gold and Silver Club. I'm really just following on from the week ahead commodity report and also last week's asset of the day. Well done to everybody who was able to execute on the trade ideas that we discussed there. It's been a phenomenal week for us, particularly on the gold and palladium trades. In fact, today we banked 2,690 points across those positions. So for each one lot traded, just to put this in monetary terms for you, that's $26,900 per one lot. So of course, if you're in 4 lots on those trades, you're making over 100,000 US dollars in just a matter of 1 week here. In fact, many of our traders at the Gold and Silver Club have reached out to us to let us know they've made over 6 figures in the latest week. So I do hope many of you have capitalized on that. We've been through that on both the week ahead commodity report and last week's asset of the day. So as we go into a new week here, what do you need to be aware of? So gold prices right now, they're trading just under 2,000 US dollars per ounce. We do have the non-farm payroll data that is coming out later on in the week on Friday. And so far, we continue to see the dollar under pressure. So we've got a perfect environment right now for commodities to go higher in the short term. So we've got the dollar trading under the 92 handle. The gold silver ratio has broken below 70 to 1, which is perfect right now for gold, silver, palladium, platinum prices to go higher. And we've seen that very much so. So gold, as we discussed with you last week, as long as we hold above 1,900 US dollars per ounce on a closing basis, look at buy opportunities around that zone. That provided us with the perfect opportunity to keep our long position on last week and then benefit from the large breakout that we've seen this week. We still keep a core position on gold from executing last week, but we've also continued to bank profits along the way. It's been the same with palladium as well. We continue to stack additional trades in on Thursday, on Friday, on the sell-offs, and then over just the matter of the last 48 hours here, palladium has broken out over 1,000 points in our direction, something that we went through with you in detail also on the week ahead commodity report. And we've also, of course, seen the Tesla stock split, which has further helped palladium, which is utilized in Tesla cars in the batteries. So with that, we've seen that very strong correlation with Tesla prices breaking out and also palladium as well. Very straightforward trade to capitalize on, where you're able to make gains incredibly fast. So we've seen that all play out over the last few days in line with the expectation and our analysis last week as well. Then going back to silver, we're going to cover this in more detail on silver asset of the day. But what we said last week was look out for support at 26 US dollars per ounce there. As long as we don't close below that level, we are going to see buyers continue to bid up the price at that zone. We continue to see both gold and silver hold those levels, offer some great opportunities to get in tight on those positions, then capitalize on the breakouts that we saw later on in the week. Also, yesterday in the UK was a bank holiday on the Monday, and what we've seen previously is where you have a bank holiday in the UK, you don't get the usual counterflow that you can sometimes get at the start of the week. So we've hardly seen any retracements. So what happened last week is that, again, many technical traders, they got completely faked out of the move there with gold. So they bought in too high, they got stopped out of their positions on the volatility on the Federal Reserve, they got chopped up out of their trades, and just when it looked like gold was going to break out on Thursday, it pulled all the way back, giving us a great opportunity to reload near 1900. And then on the Friday, we got that significant breakout. We discussed it with you also that the last 3 years after the Jackson Hole Symposium, we've seen gold prices rally on the Friday. So it's just being aware of this data. And this is where a research-driven approach is going to benefit you massively in the markets. Technical analysis will just not cut it now. It's not going to give you any sort of an edge. Data is power. You need to be aware of what the hedge funds, the money managers are doing, what the institutions are doing. Of course, I'm sure you're aware now, Berkshire Hathaway have now started to dump a lot of their equities, particularly in the banking sector. They're now getting exposure to commodities, they're getting exposure to gold, and we're seeing this as a big trend now, a big shift now in positions in portfolios, especially as a result further of the Federal Reserve last week, their overall narrative. And with that, of course, we continue to see the US dollar under pressure. Commodities are performing extremely well. Silver over the last couple of months is up 50%. You've got gold prices up 30% so far this year, but it is time to take action. Right now, you've got 4 months left until the end of the year. And the next 90 days is going to be absolutely key. We're going to be building up to the US elections here, where there's going to be some fantastic opportunities, but it's not a time where you can just sit on your positions and capitalize on the moves here to the upside. You need to be nimble right now. You've seen big volatility where what we've come across is a lot of retail traders, although they've been able to benefit by some of the breakouts, especially on the metals, they give back all of their profits on the sell-offs. They don't lock in regularly enough. They're not nimble enough on the market. They get scared out, they get stopped out, or they just flat and miss out on the entire move. So you really need to know where your edge is in the market. Again, this is where a research-driven approach will help you massively, where you're looking at the seasonality, the cycles, the intermarket correlations. You're aware of where the market makers and also the algos are targeting key liquidity zones, which is very important to know the relevant levels where you should be banking profits and also reloading on positions. Otherwise, you don't want to have had the biggest year ever in history for commodities and you made absolutely nothing, you're flat, or even worse, if you make a loss in these markets, that absolutely shouldn't be the case, but it tends to be the case with a lot of technical traders out there who are not utilizing a research-driven approach in the markets. Data is power, and you absolutely want to have that on your side. And over the next few months here, we do have, well, even specifically for this month, this week we've got non-farm payroll on Friday. Next week we have the European Central Bank announcement. The week after that we have the FOMC statement. Then we're going to be looking at end of quarter profit taking. And then after that, into the first week of October, we move into the Chinese Golden Week holidays. There's a lot to be keeping an eye on over the next 4 or 5 weeks where you need to know how to trade these particular market conditions and take advantage of the volatility where you can be generating the sort of profits and wealth that would typically take you several months, if not years, in just a matter of a few days and weeks right now on some of these moves on commodities. As I mentioned, just since last week, trades that we talked you through, 2,690 points profit that we banked already. That's the sort of profits that you would typically take several weeks and months to accumulate. But we're just seeing that in the matter of days at the moment. So again, well done to those of you that capitalize. If you're not making money right now in the commodity markets, you absolutely should be. We have the US elections just around the corner. Over the next couple of months, we'll see the big build up to that, and you need to know how to trade that. We're seeing a debasement of the US dollar, so it's not enough just to be sitting in cash or even in equities right now, where we're going to get huge volatility in the lead up to that. If you see big investors such as Berkshire Hathaway, if they're going to be moving into commodities now more significantly, that should be telling you something. So this is really a great opportunity to take advantage of what we're going to see play out over the next 90 days before it's too late and before you miss out. Even Goldman Sachs have put out in their recent letter to their clients that this could be the most lucrative time in history to be trading commodities between now and the end of the year. We've never been through these conditions before that we're seeing right now. We've never seen this amount of quantitative easing created in a single year. We're going to have significant implications in the coming months where you need to position your portfolio correctly to capitalize on some of the huge opportunities, wealth-changing opportunities that we're going to see in the next few months. But you don't want to wait too long, because there is a time-sensitive period where you need to capitalize, adjust your portfolio, your trading strategy, and really maximize on a research-driven approach. So with that, that's been Gold Asset of the Day. And of course, if you would like to become a member of the Gold and Silver Club, learn a research-driven approach to the markets, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.